Welcome back. In today's video, we're going to be reacting to a recent interview that this YouTuber, Jesus Martinez, had with the CEO and co-founder of ArchAx. And basically, just recently, there was this news announcement from the team at HEDERA and the HBAR Foundation that ArchAx tokenized ownership of a BlackRock fund on the HEDERA blockchain. And there was a lot of back and forth about whether this actually happened or didn't. And a lot of the, I don't know if whether it's confusion or just misrepresentation of the information that was published, but people took it as BlackRock was tokenizing their fund on the HEDERA blockchain. And that's not what the release said. That's not what HBAR said. And that's not what ArchAx said. So we're going to break it all down. We're also going to talk about this news that a stablecoin bill could be ready for the US House soon, according to top Democrat Maxine Waters. And they may actually also include reform or provisions about marijuana in that. And what we are seeing is the cannabis stocks are moving significantly to the upside recently. And what we're also going to talk about is GRYP mining. This is a mining company that we've been talking about recently, and they have a fairly low market cap with very, very big potential in my view. But there's some concerns that I have with some recent filings that they had with the SEC about potentially raising more money. Is this bullish or bearish for Griffin Mining or GRYP? We're going to talk about all of that and more in today's video. Don't forget to give this video a thumbs up, hit that subscribe button, turn on notifications, that way you never miss a new video. We upload every single day of the year. Let's get into it. The stablecoin bill could be ready for the US House soon, according to Maxine Waters. Now, keep in mind, she's been working on this for a few years now, and she indicated that the final version of a stablecoin bill could be ready very soon. She said, we're on our way to getting a stablecoin bill in the short run. She said it's about making sure investors have that the people are protected. We have to ensure that they have those assets to back up the stable coins. Now, I agree with this, right? USDC and Tether, if they say they have the backing and they have physical assets to back the coin, prove it, right? Prove it. And I think that is important for the overall financial ecosystem and also for the crypto ecosystem, because we saw what happened with Terra Luna and Terra UST. The Terra stablecoin collapsed everything because it wasn't backed. Even when it was backed by 80,000 Bitcoin, it collapsed, right? So there definitely needs to be some type of protections in place. I do agree with that. But there's a lot more here. Okay, a marijuana banking bill could also be paired with the stablecoin legislation. The committee has advanced the marijuana legislation that could face opposition from the Republican leaders in the Senate. However, Maxine Waters said she was hopeful of overcoming that resistance if it were to come. So what does this actually mean? Well, if they're going to push through a stablecoin bill and they're going to put the marijuana, cannabis in there, and they're doing it for banking because right now, because marijuana is not legal on a federal level, you can't transact in the traditional financial ecosystem, right? Banks won't bank these companies. And so that's a huge hurdle for a lot of these companies in states where it is okay to sell. And so that brings us to the cannabis stocks. And, you know, late last year, I was kind of dabbling in them, and then I was like, yeah, this is not really moving, and I dumped them. But then I started seeing a lot of convo at the beginning of 2024 about the potential to reclassify marijuana out of a class, whatever it is, Schedule I drug. And if they do that, all these cannabis companies, just based on the speculation alone, in my view, this is not financial advice. These are just my opinion, strategy, and thesis. I could be wrong. So make sure you guys do your own research before you make investment choices, and never make investment choices based on what I say. But in my view, if they legalize marijuana, make it easier to transact for the companies that are in the industry, or reschedule it, guys, these cannabis companies are going much, much, much higher, much higher. To show you how much higher they possibly are going to go, just take a look at where they were back in 2019 when there was discussion about this happening as well. Again, the year before the election, we're in a $40, $50 range with Tilray. And by the way, I get it. Some of these companies, they reissued stock, they, offered more, but look at ACB. ACB went from $1,000 a share in 2019. and we're now at $6. And by the way, just since the beginning of the year, Aurora Cannabis went from basically 290. That's the low for the year so far. And by the way, that's the low for Internet Computer in September as well. That was the low. But yeah, you can see that's the yearly low, $2.90 from $1,000. Again, the market cap is what matters, not the price of the stock, but the market cap of this is 504 million Canadian. So US, that's about 400 million approximately. So you have a $400 million Aurora Cannabis stock. Granted, they're not profitable, but most are not because the overhead is very high because the regulations are different in every single area of the world, right? And so I don't know. I'm looking at this. I'm looking at Tilray. And by the way, Tilray, a year or two ago, what they did was they kind of re-strategized if the cannabis industry wasn't going to be legalized. So they kind of diversified. And now, keep in mind, Tilray is one of the largest breweries. Tilray owns several breweries and is the 5th largest craft beer company in the United States. The 5th largest. So now they have the beer side, right? The alcohol side, and they also have the cannabis side. So they're well positioned in my view. And they're worth $1.37 billion right now. And we're at $1.76, right? If this industry opens up, I think they're going to do extremely well. That's my personal opinion. And seeing that they're kind of trying to push it with the stable coin thing, and it's going to be like, well, if you either do both or none, it's going to be really, really bullish for these kind of stocks. And so I'm definitely keeping an eye on it. Now, before we get into the Griffin mining stock, I thought it would be important to talk a little bit more about what else is going on in crypto. Avail data availability is now going to be integrated by Arbitrum, Optimism, Polygon, Starkware, and ZK Sync. Now, remember, we're hearing about data availability a lot more, and data availability allows more interoperability, more ability for one blockchain to tap other blockchains that do things better or more efficient. The chain users will be able to opt in or out to use Avail for data availability to stash reams of data produced for all their transactions taking place. Now, effectively, they shared that these 5 major layer 2s will integrate with Avail's data availability solutions. Users will be able to opt in or out to use the data availability, a service needed by these roll-up networks to stash reams of data produced on all these transactions taking place. A key driver for data availability solutions is that they can provide a cheaper and faster way of storing data than the main Ethereum blockchain. Avail came into the limelight alongside other data availability projects, which gained buzz over the past few months, like protocols such as Celestia that went live in October, and Eigenlayer went live in April. Avail's data availability is still in testnet, but is expected to go live very soon. And so Ethereum is going to have a lot of negative sentiment over the next few months because Ethereum ETF, I think, is going to be not approved. We're probably going to see more downside in the price of Ethereum. So understanding that there's a lot that's still in the pipeline to be released, to be integrated, to be launched, they could do this once they believe that the bottom is formed. And all these positive things that are in testnet mode right now, once they move to mainnet, this could drive the recovery narrative in the Ethereum ecosystem. But I don't know that it's going to happen before the Ethereum ETF is approved or denied. I think it's going to be denied. And I think that using the data availability integrations can be a great way to kind of gear the ecosystem back to Ethereum's going to be fine without an ETF because everyone's going to think it's the end of Ethereum, right? So Avail, just a few months ago, announced that they'd be coming out with 2 or more core products. Nexus, a layer that connects different rollups to each other through the Avail ecosystem, similar to Polygon's AG layer, and Avail Fusion, which will borrow the security of crypto assets like Ether or Bitcoin and contribute them to Avail's security, similar to the Eigen layer. Data availability is more production ready because data availability is going out soon, according to one of the executives with the company. Nexus is something that they have is still in development, and they're working with some of the teams to integrate the Nexus piece more closely. And that brings us to HEDERA. So again, BlackRock's ICS money market fund is going to be tokenized on HEDERA by ArchAx, right? So ArchAx is like a fund manager, and so they invest in things on behalf of their clients. And what they decided to do was basically put the money market fund, tokenize it on HEDERA so that they can manage ownership of the shares, right? And so there was a lot of back and forth about whether HEDERA is hosting this money market fund, whether Larry Fink is the guy who said, we need to be on HEDERA tomorrow. And so now we're going to hear from the horse's mouth what happened. And this is the CEO and co-founder of ArchAx. And he's with Jesus, or Jesus, I'm guessing Jesus Martinez, who's a YouTuber. And he interviewed him. And let's kind of understand what in the HEDERA blockchain went on here. And I'm going to be playing this at, we'll play it at 1.5 speed. So if you're already watching this at speed, it's going to get faster. And don't forget to give the video a free thumbs up. You can also click the join button down below if you want to learn more about becoming a channel member on the Cryptoviser podcast. So yeah, let's listen into what they talk about. I'm going to skip around a little bit throughout, but let's listen in. We're going to start at 46. And this is why HEDERA.
Tell me, Graham, why have you decided to build on HEDERA?
Yeah, we're chain agnostic, been around 6 years. We work with a number of chains, but when we were starting to build our regulated exchange, we knew that we needed high transaction throughput, where we came across Hashgraph. So we've known the HEDERA guys for a while. They gave us a grant back in the day to start building a tokenization engine with them. And Aberdeen, our largest external shareholder, wanted us to tokenize their fund on HEDERA. So we did that with them. It was already in place for us. So when we started working alongside other investment managers, we had HEDERA there as an option. Given it's got high transaction throughput, low fees, governing council, good for institutions, made a safe choice for this latest project.
Yeah, that makes sense. Yeah, makes sense. Like in DeFi, I feel like it's a bit slow, but the institutions are kind of creeping up. Have you noticed on ArchAx just a lot of interest in HEDERA specific?
Now we're going to be skipping a little bit ahead, but that's why they chose HEDERA. Now we're going to be going to the BlackRock fund and what exactly the BlackRock fund is and all of this drama that we recently heard.
To this, there was this huge announcement. I don't know if anybody has heard, but it talked about how BlackRock had a money market fund that was coming in. I don't think a lot of us even know what a money market fund is, but we know it has the word BlackRock on it, so it must mean something. A lot of people had conflicting opinions on the announcement, the gravity of the situation, how important it was. Tell me, tokenizing assets onto the blockchain, how many people are actually going to use this? How do people gain access to this? And is this actually a big deal?
Yeah, there's quite a lot there. So what is a money market fund? Just think of it as something that's pretty liquid, almost cash-like, but is invested in a load of high quality assets which tend to be low risk as well. So things like government debt or safe corporate debt. So a lot of institutions park their cash there rather than in a bank, and usually you can get access to your cash on T0 or T1. The reason why it's become so much interest in this kind of RWA or Web3 space is because everyone's looking at stablecoins and going, okay, what are stablecoins? They're this thing I transfer around, great utility value, it's brilliant. But when interests are higher at 5 and a bit %, what you're really doing is giving your interest to the stablecoin issuers, right? So we've all seen the amount of money that Tether and Circle and these guys are making because they're making interest on other people's money. The vision is really, imagine that when you want to go risk off, you want to stop investing in crypto, you don't think Bitcoin is going to happen anymore, you want to park it in cash, you might buy USDC or USDT and sit there. All the time they're earning a return on your money. Now imagine you could have that in a tokenized money market fund. Suddenly you're getting 5.5% a year. But if you've got a tokenized money market fund, you can still use it in all of the pools that theoretically you could in DeFi. You can use it as the settlement currency when you're buying Bitcoin. You can use it to transfer to people. So it should have all the same functionality as a stablecoin, but with a yield. However, issues start coming in because of stablecoin regulation and you can't pay interest on deposits. So at the moment, regulation kind of favors the fact that these stablecoin issuers get to keep your return and you can't have them. So
I'm going to pause right there because this is the explanation of like what a tokenized money market fund is, right? And what he's saying is accurate. Just recently in like March and April, we saw Tether and USDC market cap rising. And I saw a lot of people on Twitter and stuff like that saying, oh, well, the stable coins are rising. That means everyone's moving their money into USDC. That way they can buy crypto. And I'm like, well, some of that is accurate, but the accuracy is in that people are moving their money / value into USDC and Tether, because that's what people do when they sell. And now Coinbase and many other exchanges for that matter, but Coinbase in particular, their base currency is USDC, and USDC and USD they consider the same thing. So when most of their customers sell, they're selling into USDC at this point. And so when you're seeing during the bull market these stable coins rising, that typically means people are selling. You may not see the prices going down, but that's what it means. it doesn't necessarily mean people are moving all their money from their banks into USDC just to ready to deploy, because they could just buy directly from their bank. Like, you know what I mean? So yeah, that's why people, they move into money market. They move into stable coins. That's exactly what he was talking about there. So this next part is why choose HEDERA, and also does BlackRock know? Because everyone's saying, oh no, this is not really a big thing. And BlackRock supposedly responded saying that they're not partnered or doing anything on HEDERA. And that's not what the announcement said. That's why I don't understand why everyone is making such a big deal about this. Like the HEDERA blockchain and ArchAX are not doing things to put the money market fund on the blockchain or tokenize it. They are through ArchAX, not through BlackRock, but it's a BlackRock money market fund that they're tokenizing for their clients. So this whole misinterpretation, it's just people who they're not paying attention. They're just hearing what they want to hear. They're hearing, oh, HEDERA is saying that they got BlackRock. That's not true. That can't be. Why wouldn't our blockchain get that? It's like, calm down, guys. Calm down. Anyway, let's continue listening to what he says here.
Rest of the world pretty much this year.
So has ArchAX ever tokenized anything on the blockchain, or is this the first time you're doing this with BlackRock?
Yeah, we tokenized the BlackRock fund. We tokenized Aberdeen's fund in the past. We've tokenized UK equities. So a couple of UK's equities. We tokenized gilts. We've got 2 stable coins we're working on, both US dollars. One of them's got an associated stake stable coin and the governance token as well. So there's a bunch of stuff we're doing. We developed our own tokenization engine. So HEDERA is one of the chains we can tokenize on, as well as Algorand, Ethereum, Polygon, XRPL. You know, we tend to be commercially driven. If our clients say put it on this chain, then we put it on the chain they choose. Otherwise, we kind of work with one of our partners.
So did you
notice what he says? They do what their customers are asking them. So their customers are saying, we want it tokenized. They do it. Say they want to tokenize on the XRPL, like you just said, or HEDERA. That's what they do.
Were you the ones that chose HEDERA, or did your partner suggest HEDERA?
Well, we'd already used HEDERA for the Aberdeen money market fund, and it worked well for that. We've seen recently an issuance of a BlackRock money market fund on Ethereum, which worked well. And I think almost immediately someone dropped some Tornado cash directly into the wallet address of the issuance. So we were just like, okay, let's just, let's play it safe. We're putting it on HEDERA right now. So, a lot of it for us is about creating these products for our clients and starting to work out the functionality we want to open up to the community. But really, for all of the reasons I listed earlier, low cost, pretty high sophistication. It's green from an institutional point of view. It's kind of a bit of a low risk from those institutions.
Now, we're going to skip a little bit ahead to does BlackRock know? Because this is what everybody's been asking.
That there was like a HEDERA person counseling them in regards to like crypto laws back in the day when we were all crazy during the bear market. So it really does feel like they're really tapped into this whole thing. So hopefully it makes people more comfortable. And so did BlackRock go ahead and sign off on this press release? Like, are they aware that this is happening right now?
Yeah, they're aware. So I guess, what did we see on Twitter was kind of pretty much close to the truth, as I guess a lot of the stuff on Twitter is. So what actually happened was ArchAX had clients that wanted to invest in the BlackRock money market fund. When they expressed an interest, we opened an account of BlackRock so that we could. And with most of the investments we make, we want to tokenize them. We told them that we were going to. And then just out of a good relationship with them, we said, hey, look, we're putting out a press release. You guys happy to check it? So they checked it. They gave their views on it. So that's, why I said earlier in my tweet, look, people should check the official press releases from us, because we'll always work with our partners and get the relationships accurate there. And some kind of went a bit off track saying, hey, BlackRock did this, BlackRock did that, BlackRock were involved. They've been really great to us in all of the communication so far, but ArchAX has been leading the project.
Yeah.
And that is the key. ArchAX is the one who tokenized the BlackRock fund for their clients on HEDERA. And anybody who is trying to say any different didn't look at the HBAR Foundation's press release, didn't look at their tweet, and obviously didn't watch the Cryptoviser podcast right here on YouTube. Because I actually have a separate video where we just break down the note and the release and the tweet about what happened. And, Cointelegraph, CoinDesk, they're writing, oh, well, there was a misinterpretation. It's like, why are you even reporting on that? Like, no, anybody with a brain was able to see that it wasn't BlackRock that was tokenizing, that it was ArchAX, and that ArchAX is a money manager. And that HBAR wouldn't be tagging BlackRock if BlackRock didn't know that their money market fund was being tokenized on HEDERA. But anyway, even with all of this, there's still going to be people who say, but Cryptoviser, HEDERA is not hosting BlackRock's fund. And these people, they just don't get it. So unfortunately, they're probably not going to make it in the cycle. I mean, it is what it is. Can't help everybody. Moving right along. Oh, this is another article that we pulled up. Gryphon Digital Mining. Now, we've been talking about this for a while. I was calling it Gryphon mining. A lot of people in the comments said I was pronouncing it wrong, and apparently a lot of people do because they posted on their X page. It's pronounced Gryphon, not Gryphon. If in doubt, think of the guy from Family Guy, Griffin. Anyway, Gryphon Mining is doubling down after the Bitcoin halving. So they announced that they successfully completed a hardware upgrade for their Bitcoin mining operations to enhance efficiency with energy now that the Bitcoin halving is complete. They are mining Bitcoin at break even at 18,200. Now that's based on 2023 fiscal year. I don't know what their cost of mining is this year. And I personally think that they need to release that information because they keep referring to last year's mining cost, but we're in 2024. We're not in 2023 anymore. And so, yeah, they need to do that. The other thing that I recently saw is we've been talking a lot about Gryphon Mining, that they're going to be doing a stock buyback. And so if you go to their SEC filings, you can actually see that I think this was April 1 or something like that. Where's the date? Yeah, April 18th. They said that Gryphon Mining announced on April 22 the adoption of a share repurchasing program. Under this program, the company is not required to, but may, repurchase up to $5 million in company shares. Now, I thought this was great because they're going to be buying back some of the stock, right? And, you know, when supply is limited, price goes higher. But I was like, why else are they doing this, right? That's a lot. That we're not even in the bull market yet. We're not even really past the halving. This was 2 days after the halving. And so there's other fundraising, it appears, that they're doing. This SEC filing is from April 19th, the day after that. And it says Gryphon Mining has entered into agreements with certain vendors pursuant to the company will issue vendors up to an aggregate of 1.3 million shares of company stock in payment for services rendered and other payment obligations over the next several fiscal quarters under contract arrangement between them and the vendors. So effectively, they're going to be paying their vendors, the people who supply them with goods or services. They're going to be giving them up to 1.3 million shares of the company's stock as payment. Now, this could be viewed as a positive thing or a negative thing. On the positive side, it would say, okay, well, clearly they're vendors. They're the people who are giving them some type of service. You know, maybe they're fixing the machines. Maybe they're providing whatever other service, right, they're doing. They obviously will think that Gryphon Mining is going to grow and that their stock is probably going to grow as well. Otherwise, they would say, no, give us cash. And then they would go and invest it the way that they want. So that could be viewed as a good thing. But it could also be viewed as a bad thing. Like, does Gryphon Mining even have the money? Or are investors going to be footing the bill for this? Because if you release 1.3 million shares and then they go and sell it, that could put sell pressure on the stock. And then every investor is affected by that. And then if you're buying the stock at that time, you're buying it from the vendor. So you're basically paying the vendor for work that they did for the company, not for you. But that's neither here nor there. That just may be part of the fact that this is a small company and they're growing, and maybe they got a good deal for whatever service they're going to be paying with company stock. So it's not necessarily a bad thing. It's just something to keep in mind because this is going to be increasing the number of shares in the ecosystem. And they also posted this on as an SEC filing on the same day, April 19th. This one is a little bit more interesting and makes me a little bit more bullish. I think this one is actually better, even though it could also be viewed negatively. But think about this. On April 19th, Gryphon Mining entered into an at-the-market issuance agreement with B. Riley Securities. Now, keep in mind, B. Riley is the company that wanted to bail out Core Scientific before they filed bankruptcy. They basically told Core Scientific, we'll give you money. We'll give you $20 million or $70 million. And Core Scientific said, no, we want to go bankrupt. And then B. Riley was, along with BlackRock, is one of the biggest bailouts, right? BlackRock and B. Riley actually bailed out Core Scientific. So the fact that they wanted to bail out Core Scientific means that they knew that these companies are going to do well, right? Core Scientific is a large Bitcoin mining company. That's at least my interpretation of it, right? And so now that they're entering into an at-the-market sales agreement, basically what they're doing is they're going to buy at the market price up to $70 million of shares. Think about that, $70 million of shares. I want to put this in context for you guys. Griffin Mining's market cap, okay, market cap, is $53 million when I'm recording this video, okay? And we're seeing B. Riley wanting to buy up to 70 million shares of their stock. So yeah, that's interesting. It says the company will have the right, but not the obligation from time to time, beginning or whatever date they're talking about here, for B. Riley on any trading day to act in a principal basis and purchase up to an aggregate of $40 million of share of its stock over the term of this agreement in the respective terms. However, only one sale up to $2 million may be requested in the longer of a calendar week or every 5 trading days unless otherwise agreed to by B. Riley Securities. All shares sold to B. Riley on a principal basis shall be distributed to them by any method permitted by law deemed to be an at-the-market offering. Basically meaning they're not putting a limit order in. They're just saying, we're going to buy these at whatever the price is on the day that we're buying it. So if I want to buy it right now, it's going to be $1.47. And so this is, in my view, very, very bullish. Very, very bullish, right? Because effectively it's saying they can only buy up to a total of $2 million up to 1 calendar week or 5 trading days. So $2 million per week. There's 52 weeks in the year. It's $100 million. So within 1 year, B. Riley could effectively, they're going to be buying $2 million a week up to, if they want. The market cap of this stock is $50 million. So, I mean, this is actually extremely bullish. Now, why they're doing this agreement, I don't know. This looks like it's the ability for Griffin Mining to raise $70 million by issuing these shares, because I believe that these are going to be new shares, not shares like just from the open market. And so even though the number of shares would therefore increase, the fact that B. Riley is willing to basically buy more than what the market cap of the company is, this is very, very bullish in my view, because they wouldn't be buying the stock just for a quick flip. I don't think so. Based on what they did with getting, with helping Core Scientific, just from a financial standpoint. Like, I don't think that they're going to invest $70 million just to think that the GRYP stock is going to go up to $3 or $4. I think that they understand that the potential growth of the GRYP team, the GRYP fleet of mining, the GRYP potential in AI. I mean, there's a lot there. And so I am really bullish on it. I mean, this could go wrong. And I mean, I'm just giving you guys my opinions, right? I'm invested in GRYP. I'm invested in a lot of Bitcoin mining stocks. I think they're going to do extremely well during this cycle. Is it a risk? Absolutely, it's a risk, right? Because maybe GRYP's not going to do well. We saw a lot of Bitcoin mining companies go bankrupt or not do well financially during the bear market, but we're in a bull market. And I was a little bit concerned with the fact that they were talking about paying vendors with shares, which I was like, that doesn't sound too great. But then once I saw this about, B. Riley, this made me really, really excited. So let me know down below. I mean, honestly, I feel like a lot of people are not looking at the Bitcoin mining stocks. They will, but they're not right now. And this is a great opportunity for investors to potentially enter positions in these areas that are going to, what I believe is going to perform well in this cycle. And again, I'm not telling you what to do in your portfolio. I'm telling you what I'm doing in mine. These are my opinions, my strategies, and my thesis on the market. Hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit that subscribe button. That way you never miss a new video, and I'll see you guys tomorrow. Invest responsibly and crypto on.